You don't lose money because of the market. You lose because you make emotional decisions in the market. If you think about it, every single loss that you have incurred so far, it stems from your emotion. So if you can learn how to master your emotions, you can pretty much reduce the amount of money that you lose in the market, which increase the likelihood that you become profitable in trading. So the first thing you must understand about emotion is that emotions aren't random. They are predictable responses to pain that we're actively trying to avoid. Later on, as we break down every single emotion, you'll find out that every single emotion stems from your psychological need to avoid pain, to avoid discomfort, right? So if you can really just break it down and just redefine every single emotion, you will just find a solution to solve every single one of these emotions. Which is why in this video, I really want to make sure that I simplify every single emotion. Because right now, when you think about emotion seems like this big, hairy, scary thing that we can't seem to solve. But if you can just think in first principles and break down every single one of the complicated emotion that you face right now into the most basic, fundamental definition, you are able to understand it better. This also means that you will be able to develop solution to solve and fix and master that emotion itself. The second thing you must understand is that emotions are not good nor bad. They just are. As a human, you will experience emotions. In order to live like a satisfying life, you have to experience the full range of emotions, which means that it's going to be sadness, that it's going to be happiness, that it's going to be regret, that it's going to be FOMO, that it's going to be greed. All of these emotions are just part of being human, right? So emotions, they're not really good or bad. If you think about it, let's take a look at greed. People think being greedy is bad, but being greedy is not really bad. Being greedy is actually what drives human evolution. It's what drives us to go out there, go and work our 9-to-5 job so that we can make money for the family, right? For our tribe, for our society. And if you think about fear, fear is not really bad as well, because fear is what allow us to have this fight or flight instinct, right? To allow us to stay away from stuff that will potentially harm us or kill us. That is why when we see a lion, we are scared, we run away, right? Fight or flight instinct gets triggered. That is the fundamental reason why we have fear, is to pretty much just avoid things that will potentially harm us, which means that having fear allows you to survive for so long, right? So you can see all of these emotions, they are not good or bad, they just are. And as long as you're human, you will have these emotions, which brings me to the third point, which is you can't get rid of emotions, right? It's like you can't. It's like if you try to get rid of emotions, it's like playing a game that you can't win. Because as a human, a normal, functioning, healthy human, you will have emotions, right? Unless you are dead, which means you don't have a pulse, which means you don't have a heart, you don't have a brain, no emotion. Or unless you are a bloody psychopath. If you're a psychopath, you shouldn't even be watching this video, you should be doing what psychopath does, right? But unless you are these two criteria, you will have emotions. And as long as you have emotions, if you don't learn how to master them, they will control you and you will make bad decisions in the market, which means you are going to lose money. So in this video, like I said, I'm just going to be redefining every single emotion, right? Breaking this complicated emotion into the most simplified manner so that you can understand it, so that you can solve it, so that you can prevent it from taking control of you when you are trading. Because when we are trading, the emotional part of our brain takes over like the rational and logical part of our brain. As much as possible, like I can tell you, hey, you just need to be disciplined, you just need to be calm, you just need to be focused. But it's the exact same thing as me giving an alcoholic advice, don't drink. Alcohol is bad for you, don't drink. It's like he's just going to continue doing what he does because he haven't changed his belief, he haven't changed his actions, his thoughts, and he haven't changed his behavior, right? So he's just going to continue doing the same thing regardless of what advice I give him. So it's important that we actually break down every single one of these emotions to the most fundamental level and then develop solutions to solve each one of this. So yeah, here's my big promise. By the end of this entire course module, you will be able to operationalize emotions and learn how to weaponize it so that you prevent them from sabotaging your trading career. Now, before we dive deep into every single emotion like fear, greed, FOMO, hope, whatever, let's first take a look at what drives a behavior, right? So behavior is actually the action that you take that either move you closer towards your goal or further away from your goal. For example, if today you revenge trade after a losing streak, you created that behavior, you took that action because you want to make back the loss that you have incurred in the past 5 trades that you have lost. So that is a behavior. And what do you think drives that behavior? Well, pain, right? Because now you've just suffered a bunch of losing streak, and now you automatically catastrophize the situation to death. You start thinking, oh my God, I'm a bad trader. I need to make this money back. If not, I can't pay the bills. If not, I'm going to die, right? You automatically catastrophize the situation to death. So that is pain. Pain is what drives behavior. And what actually led you to having this pain in the first place? Well, it's our good old friend emotion. When you feel angry, you feel this pain, right? Your emotional state starts shifting from this positive, happy guy to this negative guy. Like, start blaming the market, you start blaming brokers, you start blaming smart money, and now you want to try to get back at the market by trading more, by proving to the market that you are better than the market, you're smarter than the market, and hopefully you make back the money that you have lost in the losing streak. And the ironic part is, when you try to avoid pain, right now, later down the road, you incur more pain because you're going to regret the bad decisions that you have taken when you're feeling pain. For example, after a losing streak, you feel angry at the market. That's emotion. And now you feel this sense of pain that you want to alleviate, right? Which leads you to actually continue to take a bunch of trades, right? So that you can hopefully have this one big trade that will make up for the previous 5 losses. So as a result, it causes you to revenge trade, right? Take more trades, right? So that creates the behavior. And then when this behavior, because of the fact that you are irrational and you're emotional, you make bad decisions, right? Because bear in mind that you're not in the right state of mind, right? That is why you are revenge trading. That is why you're not going to follow your trade plan. That is why you're not even going to follow your risk management plan. You are just going to revenge trade just so that you can make back the money. You do have no regards in terms of the trade plan whatsoever, right? So when that happens, the behavior lead to results and you lose money, right? Because like I said, you are emotional, you make bad decisions lead to losses. And now the ironic thing is, once again, the thought of trying to avoid pain led you to actually creating more pain for yourself. Every single behavior that you take in the market comes from a certain emotion. Every single one. And as I go through every single one of the emotion next, you'll find out that all of these emotions, right, there is a solution to them. But you can only find a solution once you really understand the emotion at a fundamental level, at like a basic level, and really like break it down and like just look at it. Because right now, emotions have power over you. Because it's this big, hairy, unknown thing that you are afraid of. But if you can just look at the monster right in the eye, you confront it, you run towards it, that is where you will no longer be scared of it. And when you are no longer scared of the emotion no longer have control over you. So let's dive deep into the first emotion, and that is fear. Now, fear is a big one, right? If you think about it, what is fear? When do you feel fear? You only feel fear before you enter the trade. You don't feel fear when you're in the trade. You only feel fear before you press the buy and sell button. Why? Because you are afraid of the unknown. You are paralyzed by uncertainty. You are uncertain of your trade plan, of your strategy, whether it's going to work or not. You are uncertain on what the market is going to do. You're uncertain on your future, right? Like for example, if you lost this trade, if you lost your account, what's going to happen to me in the future? Am I going to be sleeping on the streets? Am I going to go back to frying burgers and McDonald's, right? It's like you are paralyzed by uncertainty. That is why you experience fear. So as a result, what will happen is that when you see opportunities in the market, right, you see the setup that lines up with every single one of your criteria in your trade plan, but you hesitate. You freeze on the spot. You don't know what to do. It's like somewhere within you, you know that you should be entering the trade because that's what a disciplined professional trader do. But you are scared. Maybe because you lack sufficient data, you don't trust your trade plan enough. Maybe because you have incurred 3 losses in a row, right? So now you automatically think that the next trade that you take is going to be a loss as well, right? So there's a lot of reasons that could create this fear, but it all stems from your ability to not be able to predict the future. As humans, we try to predict everything. We feel this need to control everything, control every single outcome. So if the outcome is unknown, obviously we feel this sense of fear, right? It's like we don't know what's going to happen next. which is why the key to solving fear is to make sure that you have some form of structure in your trading. Number one is to pre-plan your trade, okay? If you go onto the charts, you mark up your charts, you have done your analysis, you have done your preparation, you have done your research. Now you know that all you need to do is to wait for price to get your desired point of interest. Once it does, you look for entry confirmation, which is these check boxes right here. You tick all the boxes in your trade plan and you just enter without hesitation, reservation, or fear. Now, the thing is, the reason why that you still feel scared to execute, even though you have done your pre-preparation, you have done your analysis, is because you lack conviction in your trading strategy. Now, why do you lack conviction? Well, because you haven't done sufficient reps. Incompetence is a result of insufficient volume. If you haven't done sufficient reps in the market, right, you haven't gathered data, you haven't tested your strategy over the law of large numbers, which I deem is 100 at least, you haven't tested your edge over the span of 100 trades, you haven't gathered sufficient data to prove that your strategy does work, then my friend, you don't deserve to be confident. Of course, you are paralyzed by fear. Of course, you hesitate before you enter for the trade because you haven't built that conviction in your trading strategy yet. No wonder you feel uncertain. So if you still hesitate, even though you have done your preparation, you have done your analysis, it's because you haven't given yourself enough evidence to prove that your strategy actually works and you are actually who you say you are. And if that's the case, then my friend, do more reps. Just do more reps. That's it. And circling back to the importance of having structure in your trading, the one thing that has really helped me the most is to have like a if-then criteria, right? If price mitigate my point of interest, I enter. If price does not mitigate my point of interest and it's in the middle of nowhere, I do not enter. I stay off the market. When you have this mechanical, rule-based approach to your trading, what happens is that you are removing the uncertainty. It's like now you know exactly what you need to do. And anything that is not within your trade plan, it's an opportunity that you should stay out of. In fact, it's not even like an opportunity. It's just the market doing what it's doing best, which is move, and you should just not care about what the market is doing. Like if the price is in the middle of nowhere like this, and it's not at your desired price point, you don't have confirmation, you don't have a tight stop loss, it's not at an ideal price point that you want to enter on, don't force the trade, right? Don't try to like impose your view on the market and try to enter for a buy right here. And the last thing that really helped me conquer my fear is you should accept uncertainty. Now, what does it truly mean to accept uncertainty? Well, the market is always going to be uncertain, right? Trading is never a game of certainty. It's always a game of probabilities, which means that you don't need to know what's going to happen next in order to make money in the market. If you have a profitable edge, which you have proven by doing sufficient reps, you will know that over the span of 100 trades, if you just win 40%, but those 40% of trades that you win have like an asymmetric risk to reward, your wins, your profits will always outweigh your losses, which means you can have a losing streak, but your next big win could potentially cover the previous losses. And that allows you to be profitable and that allows you to stay in the game. Right, so that's the level of conviction I have in my edge right now. Like nowadays, when I go onto the market and if I incur like a losing streak of 3 trades in a row, I genuinely do not give a shit. Like I just could not care less. I just continue executing my edge. Eventually, I will get that one big win that pays off like all the previous losses. Fun fact, if you flip a coin 100 times, there's a 54% chance that you will hit 7 hits or 7 tails in a row. So statistically speaking, in trading, you are guaranteed to experience a losing streak. It's what you do during this losing streak that will separate you from a professional trader from like an amateur trader. Because an amateur trader quit when he's encountering a losing streak or can do stupid mistakes like revenge trading. But a professional trader is aware of the fact that if he continue to follow his plan, eventually he's gonna get that one trade which will provide him with outsized returns, which will allow him to end off the month profitable. Now let's take a look at the next emotion, which is one that a lot of traders face as well. And that is good old greed, right? Every single person is greedy. Every single person wants to make money in the market. When in reality, that's our goal. Our goal as traders is to make money. But the thing is, if you focus on the goal of making money, a lot of times you are taking your time, energy, attention away from the process and instead putting it on the outcome. And this causes you to make bad decisions in the market. Because the goal of a trader is not to make money. It's to make the best trades. Because when you make the best trades, the money comes as a byproduct. To me, I define greed as pushing harder than your edge allows. When the efforts to accomplish a goal start working against you. Because when you are greedy, you tend to actually overtrade, right? Maybe you have experienced a winning streak and now you feel you're invincible and you want to make more, right? So as a result, you take more trades thinking that this winning streak is going to sustain forever. Or you oversize, right? You put on like a size that is way too big for your account. But like I said, because you feel this invincibility, you think that you're going to continue being good at trading, you're going to win at trading. So you oversize, you ramp up your lot size so that you can make more and more money. Greed stems from your need to avoid the pain of leaving money on the table. You want to squeeze every single penny from the market. As a result, you take more trades, you ramp up your lot size, and you try to capitalize on this lucky streak that you are on right now. What you fail to realize is that because you are euphoric, you start to neglect your trade plan, you start to deviate from your trade plan, and you just continue trading, take a bunch of low quality setups, and this causes you to compound your mistakes. Right? So over time, you make the first mistake by continue trading because you think that it's just variance, and then you make another mistake and just continue trading, and they just allow you to compound your mistakes. And next thing you know, all your profits are gone. You have gave back all the profits that you have made back to the market because you got greedy, because you couldn't control yourself, because you're like Walter White in Breaking Bad. So the solution to greed is actually very simple. Number one, you want to set a target, right? Set a profit target that you want to hit on a daily basis or on like a weekly basis. And once you hit that target, you close your laptop and you stop trading. By doing this, it prevents you from over trading. It prevents you from trading out of impulse, out of compulsion, right? Because when you know exactly when enough is enough and you stop, it prevents you from compounding your mistakes, right? So this target could be, for example, 5% per month, right? So I just want to achieve a realistic gain of 5% per month. So if in the first week of my trading, I already made 5% per month, I stop trading for the rest of the month. This prevents me from over trading, right? This prevents me from just making bad trades, making bad decisions in the market, and giving back the 5% that I've made in the first week. The next tip I have for you is to stick to one trading session. When I first started trading, I would actually trade the Asian session, right? And then I'll make some money in the Asian session. And then I would trade the London session as well, because that's the afternoon time in Singapore. And I'll make some money in the London session as well. And I'll trade the New York session, which is the night time in Singapore. And then I would lose all the money that I make from Asian and London session combined. And bear in mind that when I'm trading Asian, London, and New York session, this means that I'm literally trading from the time that I wake up to the time that I go to sleep, right? So I'm trading from like 8 a.m. till like 10 p.m., right? So I spent 16 hours on charts, and now you're telling me that I've lost everything that I've made on the day, even though I'm working hard. That is when I realized that in trading, you don't get paid for how hard you work. You get paid for the decisions that you make. So if you're making the right decisions, you're going to get paid. If you're making the wrong decisions, it doesn't matter how hard you work, you're just going to lose, right? So stick to one trading session. This prevents you from self-sabotaging and giving back your profits back to the market in the next session. The third tip is to define success. Now, right now, you think that being successful at trading means making money, making outsized returns. That's not true. Being successful at trading means becoming a skilled trader who can execute his edge without any hesitation, without any guesswork, without any emotion. And you can just continue to get better every single day. And you can just focus on the process. That's what becoming successful at trading means. Because if you have that definition in your mind and you ensure that your actions is in alignment with that definition, what happens is that over time, instead of compounding mistakes, you're compounding growth. You are getting better every single day. And that getting 1% better every single day, it might seem insignificant in the short term, but in the long term, it just compounds, right? And if you think about it, 1% on $100 account is $1. 1% on $1 million account is $10,000. It's the exact same 1%. But when you have a different context, right, a different account size, you get huge returns. So just focus on becoming a skilled trader, right? Focus on becoming a disciplined, focused trader. Focus on developing the qualities that a professional trader have that you lack right now. Because when you develop those stuff, eventually you will achieve success. Eventually you will make money and achieve your greatest goals. The next emotion is fear of missing out. In my opinion, this is the most easiest emotion to solve. Because fear of missing out basically means that you are chasing a move just to avoid missing it. So it comes from a sense of lack. It comes from a sense of scarcity. Like, you feel FOMO because you think that this trading opportunity is a once-in-a-lifetime opportunity and it's going to disappear if you don't act right now. But what you fail to realize is that the market has been here for the past 50 years. It's still going to be here for the next 100 years. And it's always going to be here, which means that there is always going to be opportunities every single day. There's an abundant amount of opportunities, right? So it's not going away tomorrow, right? So whatever opportunity that you see on the market right now, it's going to appear maybe tomorrow, maybe next week, right? Maybe in the next session, maybe in the next 5 minutes, but it will appear. But because you feel this sense of fear of missing out, as a result, you enter a trade way too late, right? You see this big fat bullish candlestick, you see price already have a lot of momentum, and you immediately want to jump in, right? Hopefully to ride the momentum to the upside. But the next thing you know, price start collapsing against you because price had given you this such bad price delivery, created such a huge amount of imbalance, which means that the pullback is going to be insane as well. So now because you enter at the top, now you're getting trapped in the pullback. And all because you entered too late, or because you feel this sense of like fear of missing out. So the solution is very simple. Number one, I call this, it is what it is. Okay? It is what it is. If I wasn't prepared for the trade, it doesn't exist. It's not my trade idea to begin with. So it's not my trade to begin with. And I shouldn't blame myself if I do miss the opportunity. If you think about it, right? The market is open 24 hours a day, which means there is always going to be opportunities in the market in every single time frame that you look at. From the 1 minute time frame, 5 minute, 3 hour, 1 hour, whatever, there's always going to be opportunities everywhere. So if you're constantly blaming yourself for missing a trade setup that is according to your plan, but if you were not in the market to begin with, like you were not analyzing the charts when the opportunity appears, that is not your trade idea to begin with. It didn't appear when you are physically on the charts. So you shouldn't feel bad for missing the trade. Instead, you should look and evaluate your trade plan, right? See what is the trading session that you tend to trade on, right? If it's the London session and the New York session, and you pick one, whatever opportunity that appeared during that session is your responsibility. So if you see a setup during the London session, when you are physically staring at the charts, and you don't enter for the trade, then guess what, my friend? It stems from fear. Okay, it stems from fear. But then if you start seeing the trade go in your way, right, and you already made this humongous move, and now you feel this fear of missing out because you should have entered, you could have entered, you would have entered, but you didn't, and now you jump in, now that's fear of missing out. And now that is you deviating away from your trade plan. Because what happens is that you had your opportunity, but you didn't take it. You didn't seize it. So you missed it. So if you missed it, then you should just let it go. You should just wait for the next bus, right? You shouldn't be running for the bus. Just wait for the next bus. Because what happens is that if you try to enter right here, you're going to be stuck in a pullback. And you're also going to be having this wide stop loss, right? Because if you're getting in on a fear of missing out, that means you're entering the trade way too late. That means price has already made its move, right? So you already missed the opportunity, which is why first fix fear. When you fix fear, right, then you think about fixing FOMO. And FOMO is a very easy one to fix, to be honest with you. It's the easiest one in the entire psychology playbook, in my opinion. The next thing you can do is to keep a log of your missed trades, right? Do not put your missed trades together with the trades that you have taken on your journal, right? Don't put them on the same journal. You want to separate them. You have your journal, which records all the wins, all the losses that you have incurred. And then you have another notebook, which is purely for missed trades. So that when you actually review them, right, you can think about what you could have done in that situation. So the next time round, a similar situation arises in the market, you enter without hesitation because you have data that actually backs up that this entry model actually works. right? So you have this notebook of missed trades, right? So whatever trade that you think that you have missed, record it down over here, and then just review it at the end of each week, at the end of each month, right? To find out why didn't you enter for the trade, or how could you have made money on this trade if you were to time travel back to the point of imbalance, the point of exponential growth. But just do not have this sense of regret when you actually miss a trade opportunity, okay? Because it's not yours to begin with. So don't run for the bus, wait for the next bus. All right, the next one is hope. Now, what is hope? To me, I define hope as outsourcing responsibility to chance. That means you are praying to God that the price will magically go in your way. That means you are praying that Lady Luck will be on your side when the trade go in your way after you have entered for the trade, right? You're praying blindlessly. That is hope. And just like what Harvey Specter said, I don't get lucky. I make my own luck. So just like Harvey, you need to be taking the actions that put the odds in your favor, that stack the odds in your favor. You shouldn't be blindly depending on luck, right? Like, luck is something that is this magical thing that is fully outside of our control. We can't control when Lady Luck will bless us. But what we can control is the actions that increase the likelihood of luck being on our side. And that is simple things like spotting an A+ setup, right? Waiting for the A+ setup to appear. Now, Tom Hoggart has this saying that people are hopeful when they are losing money and they are fearful when they are winning money, which means when they are losing money, when they are in a losing position and they are bleeding money, they tend to take action like moving their stop loss, right? Like we all know that guy who constantly moved their stop loss, hoping that the market will eventually reverse. Or the guy who tends to hold on to a losing position, right? Just to, once again, avoid the pain of crystallizing the loss. Avoid the pain of acceptance of the loss. Like I said, every single one of these emotions, it stems from your need to avoid pain, to avoid psychological discomforts. Now, here's the solution. Number one, reframe your perception of losses. Right now, you view losses as this bad thing. You view losses as this thing that will ruin your account and it's evidence that you suck at trading. That is the wrong mindset to have. Now, I like to think of a loss as a diamond that is covered in dirt. And by reviewing and reflecting upon the loss, right, to see what was the mistake that I committed and how can I get better, what I'm essentially doing is that I'm wiping away the dirt that is surrounding the diamond so that I can have the diamond. And the diamond is the wisdom, the lesson that I've learned from the loss. And this diamond, I can use it to get better. So I can essentially use my losses as fuel to get better at trading so that I can make more money, right? So losses are not actually a bad thing. They are simply a cost of doing business. If you can really accept that at a fundamental level, my friend, you won't be afraid of losses anymore, right? You won't be hoping that price reverse against you. Because once you get stopped out, you get stopped out. Which brings me to the next solution, right? Set hard stops. You need to be brutally honest with yourself. You need to be ruthless when it comes to your stop loss. Once price hits your stop loss, you don't sit there and negotiate with the market. You don't sit there and negotiate with yourself. You get out. Okay, that is why when I trade, I always have a stop loss. It doesn't matter how confident I am in the trade ideal. I accept the fact that anything can happen at any point of time, right? Like some smart money hedge fund with a big fat belly can be selling $1 billion worth of Euro USD and it could cause price to actually collapse or whatever, right? And if that's the case, I don't want that to happen to me. I don't want the trade to go against me so far because I did not place a stop loss. I did not actually take a small loss. As a result, I took a big loss. So no matter what, always set hard stops on yourself and never negotiate with your stop loss. So the next emotion that a lot of traders struggle with is frustration. Frustration is basically when expectation does not meet reality. That is why you feel frustrated. Your expectation is that price is going to go up, but reality, price goes down. So the market didn't went in the way that you hope it will go in. So as a result, you try to fight reality because it doesn't meet expectations, right? You try to impose your will onto the market. You start getting frustrated. You start thinking like, no, the market has to go in my way, right? You start throwing tantrums like a toddler. And since you feel frustrated and angry at the market, you start forcing trades. You think that, wow, the market didn't go in my way, right? But the market has to go in my way. After all, I got everything I want since I grew up from my parents, right? So if you're entitled to profits from the market, so even though the market is clearly showing signs that it's in a bearish downtrend, instead of accepting the market for what it is, once again, you impose your bias onto the market, right? So market is going down just like this and you start entering for longs right here and you get stopped out. But then you refuse to accept the fact that you are wrong. Your ego gets in the way and then you start thinking, no, I'm right? So I'm going to enter and try again. So you enter for a buy here again, right? But once again, the market continue going against you and then you start entering for a buy again, all because you refuse to accept the fact that you're wrong. And you are burning money because of your ego. And as a result, you keep on trying to get revenge back at the market because the market keep on stopping you out and you keep on trying to prove to the market that you are right and try to enter for longs here just for the market to just continue going down, right? So the market is clearly showing signs that it's bearish. If you think about it from like a rational and logical and objective standpoint, you will see that we are actually in a downtrend. But because your emotions cloud your judgment, your sense of frustration or anger cloud your judgment, it prevents you from seeing the market for what it is. You are pretty much just putting lens on yourself, right? You are wearing these spectacles and it's blinding you from seeing what the market is actually doing right now. So my friend, word of advice, do not let your account suffer because of your ego. So the solution to this is number one, take a break, right? If you have taken 2 consecutive losses in a row, take a break. Because when you take a break, what happens is that you are resetting your mind. You are getting back to mental equilibrium before you go back to the markets and you try to look for opportunities again. Because now, when you are emotional, right, you are not logical. You are not rational. You will not be able to make the right decisions. You will not be able to trade with your trade plan. You are just trading your mental well-being. So as a result, you are trying to just impose your will to the market, trying to fight the market, trying to manipulate the market in your way, when in reality, you can't, right? You're just playing a game that you can't win. So you're much better off just taking a break, right? Shutting your laptop, going for a walk in the park, meditating, right? Journaling, playing tennis, whatever. Just take a break. Once you are feeling okay, right? You are feeling calm and rational. Your heart is no longer beating fast. And you feel like you are good to get back onto the charts, then you get back onto the charts. It can take 1 day, it can take 1 week of being off the charts, whatever it is, give yourself time off the charts so that when you eventually come back on the charts, you can actually trade the market for what it is, rather than the part of the market that you see, right? Rather than your beliefs about the market, you can actually trade the market for what it is. Number 2 is that you want to journal expectations versus reality, right? Like I said, you feel frustrated because the expectation does not meet reality. You think the market is going to do this, but instead the market do this. So as a result, what you want to do is to really note down every single situation when this mismatch of expectations and reality happens. Because when you actually note it down, you realize that whenever this happens, it could be after a news. It could be during New York session, right? For example, your bias is to go for longs in the London session because you see prices going up. But then when the New York session opens, the trend starts shifting bearish, right? But because you are trying to trade in alignment with the bullish structure that was established in the London session, and now you think that it's going to sustain and continue in the New York session, as a result, you enter for longs. And what you fail to realize is that your trade idea was right, but your timing was wrong. Because in the New York session, price started reversing against you, right? Because of FOMC or because of NFP, like some bad news come out and cause the entire market to start selling instead of buying. So once again, there's a mismatch, right? You are expecting price to go up, but then the market actually shows that it's going down. So yeah, like I said, when you start journaling every single one of these situations down, you are able to just review them and just reflect on them and find like the recurring patterns that happens over and over again. And you will see that it's usually like a specific set of factors that cause this to happen, right? That cause this mismatch with expectations and reality. Remember, you cannot improve what you don't see. You can't improve what you are not aware of, right? So by journaling, you are pretty much developing the awareness that these are the situations that this tends to happen, that you tend to feel frustrated, that you tend to feel angry, and these are the actions that you tend to take, right? So if you can just spot the situations where expectations mismatch reality, and you prevent the emotion from taking control of you by changing your behavior, right, which is this one right here, you will be able to get rid of this emotion completely. The next one is one that I suffer a lot myself, and that is overconfidence, right? It's like what I mentioned earlier, the feeling of being invincible after a winning streak, like you are untouchable, and this winning streak is just gonna continue forever. Whenever you get the feeling, my friend, just know that you are about to lose everything, right? Because complacency leads to downfall. And I fundamentally define overconfidence as past success making you underestimate risk. Okay, it's because like you have been winning the past 5 trades, right? You win, right? You take a trade, you win, you take a trade, you win, you take a trade, you win, 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 win. So as a result, what happens is that you feel that, you know what, this winning streak is going to continue, right? Because after all, I've already won the past few trades when I follow my trade plan, right? So if the next few trade, I don't follow my trade plan, it's fine, right? Because I'm actually lucking. I'm actually on like a winning streak right now. So this gives me an excuse to just not follow my trade plan. So as a result, what happens is that the next trade I take, I don't follow my trade plan because I feel like I'm already good at trading. I feel so confident in my trading abilities, and I feel like I've already memorized my trade plan, right? So I don't need to follow it. I can just trade the market, right? And you trade the market, you don't follow your trade plan, you don't review your trade plan, what happens is that you start taking a big fat L, right? And this stems from you letting your past success underestimate risk. And the thing is, when you are winning and you start getting overconfident, you tend to size up, right? So you go from risking 1% per trade to risking maybe like just continue risking 1% per trade. But then eventually after the 5th win, you feel that you're untouchable, unstoppable, and you want to continue this lucky streak, continue capitalizing on this lucky streak. What happens is that you risk 5% on the next trade. And this 5% is the trade which you underestimated risk. Is that trade which you did not follow your trade plan, which you didn't even bother to review the trade plan, right? Because you feel so invincible. And that caused you to lose the entire 5%, which wiped out all the 1% profits that you have made earlier on, right? Okay, let's say that you're stupid enough to have like a 1:1 risk reward, right? So every time you win, you're only winning 1%. And the next one, you size up, you make a mistake, you take a 5% loss, and this wipes out all the wins that you have just made. And now you have nothing to show for. All because you are overconfident. All because you got greedy and you overestimate your competence, but you underestimate risk. So solution number 1 is to keep your risk consistent, right? This is the easiest way to ensure that you sustain in the game and your profits always outweigh your losses. Which means that you shouldn't be sizing up when you're on a winning streak. But neither should you be sizing down. Now, if you're a beginner, I would actually advise you to size down after like the 3rd trade that you have won in a row. Because this is where you start getting complacent, right? This is where you start automatically sizing up. So instead of sizing up, you do the opposite and that is size down after the 3rd winning trade. So what this happens is that you are able to just prevent your complacency, right? Your overconfidence from actually lead you to like a big loss, right? So yeah, if you're a beginner, I would advise you to size down after the 3rd winning trade. But if you've been trading for a while, right, you know your limits, you know when is enough, you're much better off just keeping your risk consistent. Which means no matter whether you lose, no matter whether you win, no matter how many trades you have won or lost in the past 1 month or the past few days or the past few decades, you keep your risk consistent. Right? If it's 1%, you always risk 1% no matter what. Right? Whether you lose, whether you win, you just risk 1%. The second thing you can do is to have an accountability partner. Have someone that will throw the towel back at you when you feel like watching Netflix instead of putting your running shoes on and go for the goddamn run. Right? So this accountability partner will always keep you in check. And the best thing about having an accountability partner is that he's able to spot your blind spots and prevent you from committing bad decisions when in reality, you can't even see your own blind spot, right? So by having this accountability partner, he will always keep you in check, always ensure that you are disciplined, trading in accordance with a plan rather than your emotion, rather than your ego, right? So yeah, this could be your friend, it could be like an immediate family member, it could be your trading partner, whatever it is, find someone to keep you accountable. Oh, the next one is a good one, man. The next one is regrets. Regrets. Now, we all try to live life with no regrets. We want to be on our deathbed and just not have any regrets whatsoever. But the thing is, what is regret even? if I really define regret, it's basically living in the past instead of the present. For example, I regret not entering for the trade. I should have entered for the trade. I could have. That's you trading on hindsight rather than foresight. Or another example, I regret closing the profitable position early. I should have let it run. Once again, you trading on hindsight rather than on foresight, which means you are focused on the past, not on the present moment. When you focus on the present moment and you accept that the past is out of your control and you can only control what you do today, which will influence the future, that is where you're going to be taking the actions that will actually allow you to make profit moving forward. Because you can't change the past, right? Just think about it. You really can't change the past unless you have a time traveling machine and you can go back in time and just buy Bitcoin in 2010, right? But you can't, right? We all don't have that ability to go back in time, right? So instead of relying on hindsight, we want to develop the ability of foresight. And there's this exercise that allows me to develop foresight in trading. And this is what I call the awareness exercise. Okay, the awareness exercise basically allows you to develop awareness so that you can actually prevent the emotion from taking control of you. And how you perform this exercise is by writing down every single thought, emotion, and action that you take when you are trading in your journal. And you write down every single one. Like, I mean it, like every single thoughts, action, or emotion that you face when you're trading, you write it down in a journal. And you do all of this before you trade. Okay, so it's like before or like during a trade, right? Before or right after you press the buy and sell button, you straight away write down what do you think before you trade, what were the emotion that you faced before you trade, and what was the action that you did before you trade. And for example, when I feel angry at the market, right? When I feel the urge to revenge trade, what tends to happen is that I start to do this, right? I start to do this compulsively. I don't realize it, but my unconscious do this, right? Because I feel like, damn, I'm angry at the market, man. And I want to like vent my frustration on something. So as a result, I'll slam my table. So this is the action, okay? This is the action. And then the thought that I had when I was about to revenge trade is that I feel so angry at the market, man. I need to make back the money that I've lost. That's the thought. Write that down. And then the emotion that I face is anger, frustration, right? I need to make back the money that I've just lost. I need to get back at the market. I need to prove to my parents that I'm actually good at trading. I can actually make money for a living on this particular endeavor. So that's the thoughts, that's the emotion, that's the action. And if you want to take this one step further, what you can do is to take out your iPhone, turn on the front camera, and just record yourself trading, right? Record yourself when you are about to enter for like a buy and sell position. And then go and review the recording. Because you, like this is really funny, but you will really be able to see your facial expression and what your body movements are before you get emotional, right? And for me, it was like this compulsive movement. And another thing is that I'm a perfectionist, right? So as a result, I want to make sure that I wait for every single criteria before I enter for the trade. So a lot of times what happens is that I'll be staring at the charts and I'll just start compulsively like brushing my hair just like this. Because like I want to make sure that there is no freeze and my hair is straight as hell, right? Because I'm a perfectionist. And this is the action that I tend to take before, or rather like before I miss a good trade opportunity because of my perfectionism. Because I'm actively looking for perfectionism in the market itself, right? So yeah, record yourself and just review the tape. This is what like professionals do, right? They review the tape. So that's the awareness exercise. If you do this exercise, I guarantee you will be able to develop foresight. You will be able to develop awareness, and you will be conscious the next time the unconscious thoughts are about to force you to make a bad decision. The next one is one that I struggled a lot when I started out as well, and that is impatience. I want to get in right now. I want to trade today so that I can actually make money. As a result, what happens is that I will force trades when there is no opportunity, or I will enter the trade way too early, right? Even though I haven't got my criteria met, I'll just enter for the trade recklessly because of my desire to make money. And this stems from you trying to avoid the pain of boredom, right? When in reality, this is what pays you. So if you're avoiding the pain of boredom, you're pretty much avoiding profits. Bottom pace, waiting for the A plus setup pace, waiting for the trade to go to your TP pace, right? All of this shit is boring. And these are the stuff that will actually pay you money. So if you try to avoid bottom because you want to make money, ironically, you lose money. Because you force trades when there is clearly no opportunities, you enter for the trade way too early before you have met your trade plan. And I define impatience as needing movement more than executing your edge. It's like you feel the need to do something, to trade, rather than following your edge. You feel the need to prove something to someone. You feel the need to actually prove that you are a trader. So as a result, you try to trade as much as you can, instead of focusing on the edge. When focusing on the edge is what makes you money. When waiting for the A plus setups is what makes you money. And you entering on the suboptimal setups that you see on the market, that's what causes you to lose money. Like you can see there's a clear distinction. Like instead of focusing on the quantity of your trades, which is the number of trades that you're taking on a day-to-day basis, focus on the quality of your execution, which is the quality of the trades being taken on like a day-to-day basis. Which means instead of shooting a machine gun and trying to pray that one will hit, taking multiple low probability setups, you're much better off trading like a sniper and just trading A plus setup and just waiting for that one good trade that will definitely hit. Because I don't know about you, but I'd rather take one shot that will certainly hit the bullseye than hitting 5 shots that have like a 20% chance of hitting the bullseye. So you want to trade with precision, accuracy, which means that you want to focus on one good trade, and then you focus on the next good trade, and then you focus on the next good trade, instead of trying to shoot blanks. Once again, the solution to this is very simple. You want to have some form of pre-market checklist. You want to know actively what you are looking out for, because you're just going to be constantly drifting around and look for subpar opportunities if you don't know what you're looking out for, right? So by having a clear criteria, a clear structure in terms of exactly what you're looking out for, when it appears in the market, you know you just have to press the buy and sell button. That's it, right? And anything that does not fit this checklist, you stay out of the market. This prevents you from trading out of boredom, out of stillness, out of impatience. And this ensures that you are always taking A plus setup, always taking that one good trade. And the one good trade eventually adds up, right? Imagine that one good trade make you like 5% returns. So if you take 5 good trades, that's 25% returns. 5 good trades compared to you trying to take 5 subpar trades. When you take 5 subpar trades, potentially you might win. When you win, maybe you have like a small risk to reward, and then you make like 3%. But then there's a very high chance that you will lose, right? So if you lose 5%. So if you think about it, it's like, it's the same amount of work. You are taking the same quantity of trades, but by focusing on the quality of execution, you make a significant higher return. That's it. That's the secret right there. Instead of focusing on the quantity, focus on the quality. That is why nowadays, whenever someone asks me, "Hey Brad, how many trades do you take per day?" I just know that the guy is an amateur trader. I just know that guy is a beginner trader. Because professionals, they only trade when a setup is present. And if there's no setup, they don't trade. And the thing is, we can't control when the setup is going to present itself in the market, which means we don't know how many trades are we taking on a month-to-month or a day-to-day basis, because it's just fully out of our control. But what is within our control is us waiting for the criteria to be met and executing when the criteria is indeed met. Now, the next emotion I'll talk about is actually revenge. And I personally would group revenge as the same category as frustration, right? So whatever I talk about in the frustration, it's pretty much like the same thing for revenge. The only thing that I'll add is revenge is defined as your need to get back at the market. It's like your need to try to fight the market, fight gods, right? Like if I think about it, every single time I'm encountered with like an adverse situation in life, like that time when my sergeant chose me to like be the machine gunner in my entire platoon. That is the heaviest weapon, and I'm like one of the smallest guys in the platoon, right? So I was feeling like this need to get back at my sergeant. What I failed to realize is that because I became a machine gunner, that allowed me to develop the mental toughness that I needed to become mentally tough in the market, that I needed to repel emotions away from me, right? So you can see it's like when you're in that particular situation, all you do is just blame everything around you, right? You blame the sergeant, I blame my parents for being poor, right? I blame God for giving me such a hard and difficult life. But when you look back on hindsight, right? When you look back in retrospect, you realize that those situations, those challenges and obstacles made you stronger, right? So it's like, why are you trying to get back at the market? Instead of trying to get back at the market, you could reframe it and think about, what is the market trying to teach me right now? If you got stopped out, you deserve to get stopped out. Instead of blaming the market and hoping the market going your way the next time you enter for this trade, think about, what can I extract from the market? What is the market trying to teach me right now? Maybe I should have placed my stop loss right there. Maybe I should have followed my trade plan. Maybe I shouldn't have just copied this trading guru strategy blindly without doing any backtesting or data collection, right? It's like there's always something that the market is trying to teach you, right? So if you can just reframe it, right? Instead of looking at the market from this negative light that is against you, look at it as your friend, as your companion, as someone who's keeping you accountable. Because the market is simply a reflection of your character development. So if you are getting better, you are becoming more calm, focused, and disciplined, and equanimous every single day, eventually your P&L is going to reflect that. Eventually you're going to win. So that's my 2 cents to solve revenge trading. Obviously, simple tips and tricks like just stop trading after a losing streak. Set out like 10 minutes for you to actually like reflect, right? So yeah, this is what I call the 10-minute buffer, right? It's like when you play a video game and you've lost a game, you can go into the next game in the same emotional state, right? Which means like you want to try to actively shoot every single person, or you can take the time out, rewatch the game tape, find out what you did wrong so that you can actually improve the next game that you actually entered into. Like for example, I used to play CSGO a lot, right? So CSGO is pretty much like a first-person shooter game. So what I do is that I would record every single game tape, right? Like every single time I'm in a match, I'll record the entire thing, and then I'll just go and look and just review the game tape. And I realized that I always die when I'm at like this corner, right? And then when I try to pick and try to scope that guy behind the doors, he has like a nice shot at me, and he take the shot and then like he headshot me. And it's always at that same time, at that same place. It's always like mid on Dust 2. That's the location of like the map that I was playing. And then as I try to peek through the door, what I fail to see is that guy see me earlier than I see that guy. So when I try to pick, guess what? That guy already have his crosshair on, and I just perfectly fit into his crosshair and can just take the shot. It's always that same mistake. But because I took the time out to actually reflect and rewatch the game tape, what it really allowed me to understand is that I shouldn't be picking first. I shouldn't be going to mid at that time. Instead, if I want to gain like a competitive advantage over the enemy, what I need to do is to buy a P90 and go and flank that guy, right? Go and rush to the place where he's camping at, and when he's looking through the scope, right, he's not aware of his surroundings, I take the P90 and I shoot him right in the ass. That's it. And that comes from this 10 minutes reflection buffer, right? When you just take the time out to just review the loss, right? Think about what you did wrong, what are you going to do next time so you can get better, and what is the market actively trying to teach me right now? And just extract the lesson, extract that wisdom, extract that diamond which I talked about earlier, right? Before you go back into the market with like a bad emotional states. The next emotion is an emotion that paralyzes most beginner traders, and that is doubts. I define doubts as you second guessing yourself or your system when you're in live market conditions. Like you feel this sense of, I don't know whether I should enter for the trade, even though it checks off every single one of the criteria within my trade plan. I don't know whether I'm trading at the right time. I don't know whether my strategy even works. That's doubts. And doubts only comes from incompetence. Think about how true that is. You don't feel doubts when you are so good at something. Like, do you feel doubts when you wake up and you brush your teeth in the morning? No, because it's second nature. You know exactly how many strokes, where to brush. It's second nature. You don't feel doubt whatsoever when you brush your teeth. Do you feel doubts when you take out your weenie and you pee? you don't feel doubts, right? It's like, you've done this thing so many times, it's second nature. Same thing with trading. The only reason to feel doubt is because, number one, you haven't gathered sufficient evidence to prove that you are who you say you are. So as a result, you are a fraud. You are an imposter when you try to get up to teach something that you have never done yourself. No wonder you feel imposter syndrome, because you are trying to trade when you haven't built the identity of a professional trader. Number two, you haven't been keeping the promises that you make to yourself. If you journal every single time you tell yourself to journal, what happens is that now you've developed discipline, because you are always doing the hard things, especially when you don't feel like it. When you follow your trade plan, every single time you tell yourself to follow your trade plan, guess what? You have developed a habit that will eventually pay dividends in the long run. So if you're not constantly keeping the promises that you make to yourself, no shit, you don't believe in your trading abilities. No shit, you're incompetent, right? So doubts come from incompetence. So if you can become competent at something, eventually you don't 100% eliminate the doubt, right? Like till this day, I still feel self-doubt sometimes, especially after like a series of losses. But you just get so good that you silence that inner voice of doubts. So I have this concept called the CEO mentality, which basically says conquer your fears, embrace discomfort, and outwork your self-doubt. The only way you can silence the voice in your head that is telling you you are not good enough is to do so much reps that your voice of competence suffocate the voice of doubts. That's the only way. There is no other way. The only way you can get rid of self-doubt is to become good, is to become competent. You are not good enough because you don't deserve to be good enough. You are not good enough because you haven't done enough. You're not profitable yet because you don't deserve to be profitable, right? Like, that's it. Like, you just got to do more. That means more reps, more trade reviews, more journals, more data. And once again, right, doubt comes from your need to avoid being wrong. Like, the reason why you feel doubt and hesitate is because you don't want to be wrong. When in reality, that causes you to be wrong 100% of the time. Because if you don't take risks, you're not going to get outsized returns, right? If you don't actively try to put yourself out there and try to be wrong, you will not be able to make money. Because in trading, if you want reward, you have to incur risks. That's simply the price you have to pay in order to get the return that you want to get, right? So you have to outwork your self-doubt, man. So the solution to doubt is very simple. Number one, develop a mechanical system, right? Developing a mechanical system with a binary criteria. If this happens, then I will enter. If this doesn't happen, then I will stay out of the market, right? So once again, create some structure and order in your trading so that you're not lost in uncertainty and you don't feel like these doubts, right? And the next thing, which is even more important, is to actually backtest. No, it's not backtest even, right? Just test the hell out of it. You need to test the hell out of the system. Because when you test the hell out of the system, what you're doing is that you are gathering data. And data is what drives conviction. You don't get confidence by copying someone else's profitable strategy alone. You get confidence by gathering data and doing so much volume that is undeniable that you do not believe in your trade plan, right? That you do not trust your trade plan, right? So go do 100 back tests, go take 100 trades that is in alignment with the mechanical system. I can guarantee you, I triple guarantee, you will feel these doubts get eliminated. It won't eliminate 100%, right? But it will like eliminate 50% of it. I can guarantee you that. Because when you have done 100 trades, right, in live market conditions, but also in simulated market conditions, by that time you have already gotten so good at trading, or rather so competent at trading, that it's unbelievable that you do not trust your system. And when you trust the system with so much conviction, it's unbelievable that you do not succeed, that you do not actually make money in the markets. So that, my friend, is the only shortcut to eliminating doubts. You can't eliminate doubt by manifesting your way out of there, right? You can't visualize your way out of there. You have to take so much action that it pretty much suffocates the doubts. Since I started live trading, I always have people in the comments saying that you are bad at trading, right? You are a fraud, you are a scammer. And I could sit there and let those doubts overwhelm me. I could just sit there and just feel like shit. But instead, I choose to use their doubts as fuel. Instead of lamenting and being disappointed at the world because I've put in so much value into these videos, I was like, you know what? I'm going to use all of these naysayers, all of this hate as fuel. And I'm going to get so good at trading that I'll let my results speak for itself. And since the start of 2025, you can literally see every single live trade I've taken, be it win, be it loss, be it lessons I've learned, all documented on my second channel, Bread Trades. So now it's like I have completely eliminated the doubt of others and also the doubt of myself, because I've done the exact thing that I say I'm going to do. If I tell you that I'm going to become profitable, I will do everything within my ability to become profitable, or I will die trying. There is no in between. It's either I will become incredibly profitable or I will be incredibly broke. There is genuinely no in between. So yeah, at the start, yes, they are going to doubt you. Your friends is going to doubt you. Your family is going to doubt you. You are going to doubt yourself because you haven't given them a reason not to doubt you. Right? You are a beginner. You are in your apprenticeship phase. You are like a beginner walking your first step, trying to be a master. Of course, you won't see results. Of course, you are surrounded by doubts and self-doubts. But eventually, when you do so much reps, right, that you have no chance but to be great, so great that they can't ignore you, your results will speak for itself. That is why I always say, just work in silence and let your results speak the noise. There's no use trying to argue otherwise. There is no point trying to waste your energy and time convincing other people that you are indeed good and this thing is actually going to make you rich. The only way you can get rid of all that doubts is just work. Because success is the only revenge. This is the exact same philosophy that allowed me to build the 1% Club to becoming the best trading mentorship out there in the entire world. It's like when I built it, everybody is like, nah, this is just another course. This is like a shitty course, right? It's cheap, it's like lame, right? And once again, I could have let all those doubts suffocate me and just lay there and do nothing. Or I could do everything I can to make 1% Club the best program out there that actually get results. And actually get results for every single person that come into our program. So as a result, what happened is that I worked day and night, even when I was in the military, every single day, every single weekend, every single night, just chipping away, right? Just building a course, right? Just putting all of this information I've learned in the past 7 years into one entire course, one entire module. Like most trading gurus take a weekend to create a course and then they sell it for like $997. I spent 1.5 years building the entire 1% Club syllabus from top to bottom, from A to Z, and every single lesson is so detailed that nothing is missing whatsoever. Because my philosophy is, in the short term, the market is a voting machine, but in the long term, the market is a weighing machine. So I can do all of this lifestyle marketing crap and try to market it myself, try to promise people that this is the get rich quick scheme, just buy my course. Or I can build such a great product, right, that actually get our student results that my customers will market it for a lifetime. So instead of me marketing it for my lifetime, my customers market it for a lifetime because the result is so good, right? The program is so goddamn good that anybody who join 1% Club will automatically get results. And that is why we can guarantee results. Because I've poured my blood, sweat, and tears into building the best mentorship program out there in the entire world, right? So of course I have no doubts whatsoever. That's why if someone asks me, hey Brad, how much is your program worth? Without a doubt, without an ounce of doubt, I would say it's worth 100K. And for some people, it might seem delusional. For some people, it might think that, fuck man, you're just full of shit, Brad. But I have absolutely no doubt. I have 100% conviction that my program is worth that amount of money because my program can actually make you that amount of money. That is how confident I am. So silence your self-doubt by working so hard that you prove not just to the world, but yourself that you are indeed who you say you are. That's the only way. Success is the only revenge. Becoming profitable is the only revenge. All right, so those are the emotions. And let's talk about action, right? Because everything here is useless if you don't actually implement it. Knowledge is absolutely useless if you don't actually apply it, right? Applied knowledge is what makes you rich. That is why this is the actionable step that I want you to be taking, right? This is a very practical exercise. The first thing I want you to do is to actually take 1 to 2 emotions from this entire course that you are struggling with right now, right? Go and identify like which one is the one that you are struggling with the most, right? Because that is where you want to be focusing most of your time on fixing, right? Because that is like the most high leverage task that you can do right now, is to identify what are the emotions, what are the psychological barriers that is holding you back from results, right? It could be FOMO, it could be greed, it could be doubts, right? So identify like the top 2 emotion. And then the next thing you want to write down or rather reflect upon is ask yourself this one question. What pain am I avoiding? Because in order for you to solve the problem, you have to get down to the root cause of the problem. And the root cause of the problem is what is the pain that you are trying to avoid when you are faced with this emotion. So if it's impatience that you're struggling with right now, then it's probably avoiding the pain of boredom. And then if it's the revenge trading that you're struggling with right now, then you're probably avoiding the pain of the humiliation of losing. Like you're not afraid of failure, you're afraid of what other people would think if you fail. And then if it's regrets, then it's probably avoiding the pain of taking responsibility over your mistakes. So you can see like every single one of these emotions that you're struggling with right now, chances are there is a pain that you're avoiding. So you need to really identify what's the pain, so that once again you can confront and look at the demon right in the eyes, and you can take out a sword and like slay that bitch. The next thing is that I want you to solve it, right? Solve the emotion. Now, like I said, you can't completely eliminate the emotion, but if you implement the solution that we have talked about today, right, in this entire course, you will be able to prevent that emotion from taking control of you. And that's all it matters. It's to develop the conscious awareness the next time the emotion arises and prevent it from taking control of you. And you can even like prevent the emotion from even arising in the first place by using the solution that we talk about today for every single one of these emotions. So just to recap, clearly define what is the emotion that you're struggling with right now, right? Pick the top 2, the top 5, and then get to work to start solving them. Or after you've answered the question, what pain am I avoiding right now? All right, so the goal of this course module is not for me to sit here and yap. The goal of this course module is for me to change your behavior. And I believe that is what intelligence is. Intelligence is not defined by IQ and EQ. To me, I define it as the ability to implement the knowledge that you have learned as fast as possible. The ability to change your behavior. Like the person who can memorize everything but doesn't understand anything or doesn't act upon the knowledge is a stupid person. Right? But a person who can actually go through everything that I've talked about today and actually implement it in their trading career, that, my friend, is a person who is worthy and is deserving of profits because he actually took action. Right? So go and do the practical exercise that I just told you about, right? Follow the 3 steps and eventually find the root cause, unplug the leaks, and really like go and solve the problem and look at the demon right in the eye and slay the dragon. Ultimately, you must understand that your goal as a trader is not to suppress emotions. It's not to eliminate emotions. It's to be more mindful of emotions when they arise. It's to translate them into operational rules. It's to weaponize them. Because the person, the trader who can understand the emotions, master the emotions, and weaponize the emotions is a very powerful trader. That is the trader that I do not want to F with, right? That is the guy who is like, he will succeed no matter what you throw at him. It's like he will win the game. Just think about it. If you master every single emotion in the dictionary, you will pretty much solve 99% of your problems. You will be able to handle every single situation the market throws at you. That, my friend, is the power of the psychology playbook. Now, that's pretty much the entire training. If you guys enjoyed this training, you want me to do like a part 2 to this training, because today we have covered emotions, but then there is also your cognitive biases that is influencing the way that you think, the way that you behave as well. That also influence your trading decisions, right? So that could potentially be like a part 2. So if you guys have enjoyed like this entire training, let me know in the comments, let me know in the community, right? So I can do more of it. And yeah, I'll do a part 2, right? Which we go deep dive and operationalize every single cognitive bias that influence our decisions, which influence our results. All right, so that's it. Appreciate you investing your time and attention into this. Now, let's get to work.